Monero, a privacy-focused cryptocurrency, just faced a huge threat after major exchange Binance unexpectedly delisted it. Monero's price crashed over 30% following the news. This raised big questions about whether coins that allow anonymous transactions can survive long-term as government oversight of crypto increases. Privacy coin Monero, XMR, suffered a major setback last week when leading cryptocurrency exchange Binance announced it will delist the token. The move has stoked fears over privacy coin's uncertain future and Monero's long-term viability. Unless it adequately addresses emerging legal concerns, additional exchange delistings seem likely. Let's take a look at what happened, why regulators are cracking down on anonymity-focused cryptos, and what it could mean for the future of financial privacy on the blockchain. Binance delisting sends XMR prices into freefall. Binance dropped a bombshell on February 6th by announcing plans to delist Monero on February 20th, alongside 3 other tokens, Aragon, Multichain, and Venus. According to the exchange giant, these cryptos no longer meet the high listing standards required to maintain a healthy and sustainable crypto ecosystem. The news immediately triggered a panic sell-off as XMR holders rushed to exit positions. According to data site CoinGecko, prices crashed nearly 17% following the announcement. The selling pressure steadily intensified over subsequent days as skeptical traders digested the implications. XMR ultimately plunged over 30% to hit a 20-month price low around $114. The extreme volatility also fueled tremendous open interest growth, as speculative traders opened 280% more futures contracts betting the sell-off would continue. Meanwhile, funding rates, traders' premiums for long or short positions, flipped heavily negative as belief weakened in a potential reversal. Together, this signals the delisting sparked a crisis of confidence with little expectation of near-term relief. Rather, the technical landscape points to extended downward momentum as the market processes the new realities facing privacy coins. According to Binance, we're always reviewing the coins and tokens listed on our exchange to ensure they continue meeting our high standards. When one drops below the bar or the crypto industry shifts, we take a closer look and may delist it if needed. We know some users may disagree with these decisions, but ultimately, strict guidelines for listing coins helps create the healthiest environment for all our users long term. Why Binance delisted? Monero. Though drastic, Binance's decision did not come without rationale. As the world's largest crypto trading hub by volume, Binance falls squarely in the crosshairs of global regulators. Recent years brought increasing legal pressure on exchanges to increase transparency and crack down on potential illicit transaction vectors. Anonymity-enhancing cryptos like Monero allow users to obscure wallet addresses and transaction details. While not illegal itself, this privacy makes tracking payments or identifying participants virtually impossible. Governments worldwide favor transparent blockchains with transaction visibility to enforce anti-money laundering and anti-terrorism financing laws. Unable to reconcile Monero's hidden nature with regulators' demands for greater oversight, Binance ultimately determined the compliance risks outweighed the rewards of continuing to list XMR. The future of privacy coins. While terrible for Monero investors, Binance's decision carries troubling signals for privacy coins as an asset class. Voices across the crypto community reacted, fearing it underscores the intensifying regulatory scrutiny and questionable future viability these cryptos face. Monero delisting builds on other anti-privacy coin momentum seen recently. The popular crypto exchange OKX dropped some surprise news right before the new year. They were ditching major privacy coins. On December 29th, OKX had announced it will remove a bunch of trading pairs, including top anonymity tokens Monero and Cash. Partly private coins like Dash and Horizon were also getting the boot. According to the statement, OKX would officially delist a total of 11 trading pairs with these 4 coins on January 5th, 2024. So any users still holding or trading Monero, Zcash, Dash, or Horizon on the exchange should have taken note. This move signaled shrinking support for crypto's leading privacy projects among top exchanges. Australia bans privacy coin investments. In August 2023, Australia banned privacy-focused cryptocurrencies from being approved as investable assets for average citizens. Japan restricts privacy coin trading. Similarly, in June 2023, Japan barred its licensed crypto exchanges from offering trading pairs for anonymity-centered coins like Monero. Regulators increasingly targeting privacy coins. With powerful countries explicitly cracking down on privacy coins, the path ahead looks difficult. Unless changes are made to address their concerns, regulators may force more exchanges to delist these cryptos in the future. This could accelerate downward spirals in adoption and value for the coins as each delisting chips away at their legitimacy. While privacy technology still has its proponents, losing support from top centralized platforms undercuts their mainstream potential. Die-hard users may turn to decentralized or offshore exchanges still welcoming privacy coins, but marginalization from prominent mainstream platforms poses serious obstacles to mass acceptance. What's next for Monero? Despite the bad news, Monero still has competitive strengths to build on. Much of the crypto world supports its overall goal of financial privacy. As the first major privacy coin, its reputation and technology give it an edge. If the developers can add features to give regulators some visibility when truly necessary, governments might ease up on Monero. This oversight could let them meet legal mandates without fully sacrificing anonymity. Unless changes happen to enable compliance, privacy coins will likely see wild price swings continue. Fears linger where the governments might ban fully anonymous transactions someday. Monero fans hope the plunging prices stem mostly from panicked overreactions. If prices stabilize, cooling emotions could kick off a rebound rally. For risk-tolerant buyers, huge drops make for tempting entry points if fundamentals strengthen. But with less exchange backing, rebuilding mainstream support poses much bigger challenges for Monero in the delisting aftermath. With Binance's withdrawal of support, Monero faces much steeper challenges capturing investor interest moving forward. Delistings also erode the convenience and accessibility that aids crypto adoption. Monero's dilemma highlights the clash between crypto's early libertarian ethos and its aspirations to go mainstream. As regulators gain power to set industry rules, they may define where decentralization gives way to compliance, for better or worse. Cryptocurrencies founded on ideals of financial freedom now confront hard questions over whether anonymity and regulation can coexist. Or could global adoption require compromising core crypto principles? As privacy coins land in regulators' crosshairs today, their uncertain destiny likely foreshadows coming showdowns between crypto libertarians and rule setters that will shape the industry's future direction. And that wraps up our breakdown of the recent negative developments facing privacy coin Monero after being delisted from leading exchange Binance. And be sure to like and subscribe to Digital Financial Freedom channel to get the latest videos analyzing major news events in the cryptocurrency world.